Greetings everyone, Joseph James here from theschooltrade.com. Today was March 11th, 2010. Here's your live trade room recap. Hope you guys had a good day with us in the room this morning. Lots of new faces this morning, so welcome to all of our guests that came out and joined us for our free 3-week trial. Before we guys talk about our trades we took today, I want to remind you guys about the 3 important links here. If you're watching this video right now on our blog, you can double click on this video, right? Just double click on the video. It will take you right to our YouTube page. And on that YouTube page, you can place comments. You can rate the video, you can subscribe to our YouTube channel. So if you're watching this video right now on something other than our YouTube page, just simply double click the video and it will take you right to the YouTube page, and the links in the description, very important. One takes you to our blog. We post all kinds of great articles and video series there, guys, in the blog. We have our 12-month track record posted. And the third link is for our free 3-week trial. So make sure you guys double click on that video. That will take you over to the YouTube page, and you can use those 3 important links. Now, guys, today was contract rollover, so we had a pretty slow and sluggish morning this morning here. A couple trades on gold, one on crude. As you can see, mostly in the red. We had to be a little bit patient today. Patience paid off at the end of the morning. We made a bunch of money at the end of the morning this morning, but as you can see, only 3 trades today. 22 ticks, 220 USD, contract rollovers, as you guys said. Very slow day today in the market. But we've got $4,000 this month in March. Only 4 contracts needed so far, guys, and we're over $25,000 in the year so far of 2010. We'll keep you guys posted throughout the rest of the month of March. The most important thing happened today, well, again, today was a Thursday. So whenever we have a Thursday, we always think jobless claims, right? Jobless claims at 8:30 meant that we wanted to be ready for some volume to spike here at 8:30. We didn't get very much of it though, did we, guys? Because we had contract rollover today as well. The 11th through the 18th of March is going to be that contract rollover period for the E-minis, the currencies, and of course the dollar index. Now, this doesn't apply to gold or crude. We'll talk about that in a separate video, specifically on on contract rollover. But we knew, of course, with rollover being today, we knew we were going to be sharing volume between the front month contract we've been trading and the new potential next front month contract. Okay, so of course, when you opened up your charts for the Russell this morning, you saw the 310 contract, right, had some volume, but now the 610 contract also had volume as well. So we were seeing very sluggish moves at the open. Now, like we always do, we always watch that first move of the morning, right? The first move of the day. What does it look like? Well, today, the first move of the day was very slow and sluggish. It lacked a bunch of follow-through. So we watched the pattern set up, and rather than taking that first move of the morning, we simply watch and see how it's going to end up playing out. This morning, we watched it on crude this morning at about 8:30, and a 2-step pattern on crude this morning went nowhere. We saw no big money in the market. And of course, guys, I want to remind you, we take notes every morning. And if you guys want a copy of those notes, just email me, jj@theschooltrade.com, and I'll send you guys the exact link or the attachment with the notes we took today. So the first moves of the morning lacked follow-through. So we knew with contract rollover, once we saw 8:30 come and go without any good volume, we knew we had to wait today for price to gain some speed. Now, this is nothing new, right? What did we say yesterday? Yesterday, we had to wait 3 hours until 11 o'clock to take the first trade. The day before that, we had to do the same thing. We waited till about 10:45. So we've been conditioned this week to have to wait a little bit longer to take some trades, and that pretty much kind of held true here today as well. Now, when we opened up our charts, we always spend a lot of time, guys, when we first get started in the morning, looking over the charts. What do we see, right? What's going on in the market? What are the clues the market's giving me? Now, again, guys, we take notes about these clues, and I have those notes ready for you. If you want, just email me, jj@theschooltrade.com, and I'll be sure, of course, to give you guys a copy of those notes. Now, here on the gold, guys, we saw a very interesting situation here. Now, when we open up our charts for the first time every day, what do? We're going to start looking at our slower time frame. And our slower time frame up here in the left, right? That slower time frame, of course, this is a much smaller version of it. We notice these blue lines here, okay, up top and down bottom. Now, those blue lines, those are double tops or double bottoms. So on my slow time frame, I open up the gold futures market, and I notice right away double bottoms around 1100, double tops around 1115. So we mark up these dark blue lines here. What that tells us is to expect price to get pretty choppy around there, right? It gives us a heads up. Now, after we, of course, identified these, what happened is gold just kind of sat there, right, and began trading around these blue lines. Now, that, of course, looks great on my slower time frame, but what does it look like here on the fast time frame? Because that's where, obviously, we're going to be trading off of. So we took the short term, the slower time frame, and we found our double tops, our double bottoms, right, the major levels of support and resistance. And then we look over here on the fast time frame, and what do we see? Well, first of all, today's low of day here at 1105, right, 1100.5, and the previous low of day at 1103.1. So we've got yesterday's low and then today's low, and we're sitting there chopping around right below yesterday's low and above today's low. Not a very good spot to be in, right? I wouldn't want to be there because we've got overhead resistance as yesterday's low. We had the low of day as support, and so we're sitting there chopping around sideways. Now notice the time here, guys, right? It's 8:45 right now. This is at 8:45. Okay, so we had already gone through the initial jobless claims report, 8:30. Now this is why we were concerned, because if you also look down right at the pace of a tape indicator here, you'll see, look at that, very slow red pace of a tape. So after 8:30, it began slowing down tremendously. So what does this market tell us this morning? Right? What does this market tell us? We have double bottoms, double tops on the gold slower time frame. We're tucked right underneath that double bottom. And of course, we see on my fast time frame, I'm now trapped between today's low of day and the previous low of day. Right? So I'm in a very tight trading range. And then of course, we have red pace of a tape. This tells us we're tucked below the previous day's low. So what that usually tells me is there hasn't been enough upside pressure to move it back to the upside. So there's probably still enough sell side pressure to keep this thing pushed down, but we might be lacking, right, the ability, the decisiveness to push it back to the upside. So we're going to want to wait, right? When we see stuff like this happen, guys, sideways like that, slow, we're going to want to wait. And that's exactly what we did, right? We waited a little while, we waited for price to speed up.